Yeah. I was writing this down. So the four things that you said that the lenders are looking for. You said location. You said the specifics about the property. You said the borrower, their history and how strong they are financially. What was the last
Underwriting.
one? Underwriting. That's what. Yep. Underwriting. Okay.
So, and that's sort of like cash flow, loan to value, debt service. And,
I got you.
And almost all deals are made in those combinations. So you could have a super low loan to value, great borrower, and the property's in Blythe.
What's wrong with Blythe, man?
Hey, nothing against Blythe, but because there's people living there and business going on. But a lot of lenders are, and this is how it is. They have nothing against Blythe, but you're lending across the country, and the lenders will have parameters like this. Like, we don't lend on demographic areas less than 50,000 people.
Right. Yep.
I don't know what Blythe is, 10, 8, whatever.
Maybe.
Right. So nothing against Blythe, but it's not in their parameters. They're not looking at it. They're trying to put out, 500 million across the country every year. They're not looking at small municipalities. Or if you go to, say, like Downey in Los Angeles, and what the 5 mile population is probably 500,000.
Right.
Huge. That, no problem.
Correct.
So there's an example where location will really change what solutions you can bring to the table.
I got you. Okay. Now,
that makes sense?
Yeah, that makes sense. So let's get into the borrower. What's the typical borrower that you're looking for as far as, all right, experience, net worth, down payment. What does that look like for you guys?
Especially as it relates to storage.
Correct.
Storage is, in a general, let's start with real general. They're looking for borrowers with experience in the property type, some amount of experience. So sometimes we have to sort of skin the cat and figure out how to tell that story. Usually, most lenders are looking for a borrower with a net worth at least equal to the loan amount to maybe twice the loan amount. That's sort of
So if I'm borrowing 2 million, they want me to be at least 2 million or above, depending on the product. Some of them might even want me to be at 4 million.
Yes.
Okay.
Kind of in general. As you get larger in loan amount, maybe that's a little less stringent. But if you have $1 million net worth and you're buying a $4 million property with a $2.5 million loan, that's challenging.
Yeah.
And there's not any specific regulation on that. It's just sort of that if you only have $1 million net worth, you haven't been around long enough. In general, that kind of describes.
Right. Yeah.
Experience-wise, especially with storage, I don't know, you may see this, but especially lately, storage is so popular.
Yep.
But you see people call up like, I'll just rent them up like an industrial building and then it's all set. I don't have to do anything. And so that's not storage.
Nope.
And lenders have figured that out. And so it's helpful to have, it's hard if you have no storage experience, you're buying a property, and we have to figure out how to tell that lender why you'll be able to operate that.
Yeah.
Never having done it before. The easiest way to fix that would be that, you have other commercial property experience for sure, but also that you would hire or use some property management,
like a third-party management company
that's experienced in storage.
That makes
and
sense.
Then we would play that and use that. We still would probably get some no's depending on, but that's sort of the angle that you'd figure out on that deal.
I got you. What if it's a situation where you got a lot of new folks that syndicate? They go out and they pull together money from some experienced storage investors. Would you guys look at something like that where I'm a newbie on the block, I'm looking to get into storage, but maybe I got 3 or 4 other guys that's funding me that actually own 5 to 10 self-storage sites.
That'd be a great way to do it.
Okay.
Yep.
All right.
The caveat there being that if you're the only deal sponsor, meaning that the new person, meaning they're the manager or general partner, and the experience are just limited partners, from the lender's standpoint, that's problematic.
Gotcha. Yeah, you want the experienced guys to have some type of recourse and to,
so the problem for the new guy is that you're going to share some of your general partner responsibility and return with the person who, But it might be, so I'm not a hard and fast guy. So my job is to try and figure out how to skin the cat for the client. If the client came and they had some giant limited partner investors that were going to lend their experience but not be a sponsor of the deal as far as to the lender, we would try that, but that would be the challenge of the deal. We're going to get a lot of no's because the person who's signing the documents and the manager of the partnership, it's his first deal. That's problematic.
Right. You guys would want to have one of those experienced guys co-signing on that loan and having them attached to it as well, and them having some type of recourse.
Here's our general approach though my general approach is that, we talked about those 4 things that a deal stands on.
Yep.
Sometimes you can fix, so in that case, we've got an issue with the borrower that most lenders would reject over or aren't interested. We would try and figure out if there's ways on the other 3 that can make that deal so good they're willing to consider it anyway. That's kind of always our angle, is how can we play up the strengths that we have to overcome the things that we don't.
I got you. Like, let's say, hey, the borrower sucks, but this is a great location. The property cash
50% loan to value.
Yes. Yep.
Blah, blah, blah.
And the debt coverage ratio is 1.75.
Yep.
Like, come on.
And sometimes we'll find somebody who goes, you know what? We get it. So we never say no. We never turn. My job is not, we never decline deals generally. What we might do is just say, that's so challenging, it's not really worth your time or ours. But I always try and figure out how to say yes in some fashion or another.
Yeah.
And then the client can see if that fits for them or not.
That makes sense. Okay. So I know you do a lot in shipping container storage, which there's some lenders that they won't touch a deal if it's
many.
Many. If it's, the shipping cargo containers, they view them as, hey, it's personal property. They can pick those things up and move them tomorrow. But you actually have developed a niche and a specialty in financing several of these shipping container deals. Can you speak about that program?
I'm thinking right now. I think I've done 4. Maybe not entirely shipping containers, but a lot of clients will augment the real property buildings by a few containers that add space and so some lenders just they would lend, but they will if anything that's in a shipping container, they just pretend that income's not there.
Oh man. So what if like 60% of your income is shipping containers?
Right. Well, so there's a bunch of different issues that you have to overcome with the shipping containers. One is finding a lender that won't have a problem with that. And typically banks and credit unions, slightly more expensive lenders, will overcome that. And they partially do it because they have recourse to the borrowers. If the borrower really believes and they're signing personally on the loan, the lender will go with that, even with the shipping container collateral.
Yeah.
And we have some life companies that will do that, will do shipping containers. Depending, again, they're not going to be as aggressive on loan to value. So you can do it. You just have a slimmer pool of choices for the clients.
I gotcha. Is it usually higher rates, interest?
A little bit, usually, often because you have less choices.
Right.
Normally, this is kind of an aside at the moment, but I look at a deal of, we want to see, hopefully the larger pool of choices we have, the better. And then as the deal has issues of certain kind, you start losing lender options. Like shipping containers, you're going to lose 2/3, half, 3/4 of lenders that would do storage. All of a sudden they're gone.
Yeah.
So we're left with 25% choices. And then maybe location takes out a few more, suddenly we're down to like 3 or 4 lenders. That's kind of how I think of a deal. And we end up with the right solution.
Yeah.
There's another problem with containers that is not as obvious, that you need to sort of pay attention. Otherwise, it'll come back and bite you while you're in the last half of the transaction. And that is how the appraiser treats the container. So if you just, containers themselves aren't real property, right? They're personal property.
Yep.
So you can go buy one for, I don't know, what are they, 10 grand? 8?
Yeah, depending, you can get some for $2,000. Like if
Right,
you
there
get
you
just
go.
a regular 8x40. Yeah,
And they come on a truck and they set them on the ground and they can leave with a truck, right?
exactly.
So the problem with that is so when this is just a small technicality and borrowers don't care about this, but the appraiser does. The appraiser has to, and the lender does because of what the appraisal will say. And it goes into the file and the regulators look at that. So lenders will lend on real property. And this is where we have the issue. If containers aren't considered the real property or real property square footage, that's where we start to hit problems where, the real property is not as many square feet as we think. And that's
Right.
where the lenders sometimes don't want to count on the income. So the containers end up being disguised as real property. I don't even know if they're disguised. They can become real property actually if they're affixed to the land.
Yes, yeah. Yeah.
Um,
what if they're permitted? Like, what if the person went to the city and they actually got permits for the containers? Would that then be considered real property?
That's another way.
Okay.
Or sometimes, they're set on like concrete.
As blocks.
Yeah.
And the railroad
And they're
ties.
tied down. I've seen some where the concrete block is poured into the ground, and then there's like a cable that comes up through the end of the
Okay.
container. So suddenly then it's kind of real property because it's affixed. Or we've seen the containers actually included on the square footage for the real property taxes.
Okay.
So there aren't real hard and fast rules, but what the problem with this is you want to dive in and sort of get a sense of, talk to the appraiser or get a sense of where the appraisal may come out on this, because the problem that you're trying to head off would be everybody's good. You got so many square footage, you got all this income. The lender orders the appraisal. We're all good. We're collecting tax returns and doing all that stuff. The appraisal comes back and it's 5 weeks into the process. And suddenly the appraisal delineates that, so much square footage, like half your square footage
Yeah.
is not real property.
Instead of 60,000 square feet, it's now 20 or 30. Yeah.
And all of a sudden the lender may be dying to make this loan and want to. No lenders want to turn the deal down. Let's dispel that myth.
Right.
They're all in the business. They have pressure to make loans, not the other way around.
Yeah.
But all of a sudden now we've got an appraisal that's in the file was ordered by the appraisal department that now says, hey, 20,000, 50% of your property is not real property. It's this personal property square footage. All of a sudden the lender's got a problem because that'll get flagged. It goes into a different bucket of money. They have different reserves. Suddenly it's not a loan that's so attractive anymore. And so I don't have any great solution for this other than you kind of want to get in and talk to the appraiser and sort of see how they might do this. You want to look at the real estate taxes, what the assessor says is square footage.
Right.
You sort of want to build your case and then kind of shoo it towards the appraiser so that you don't end up with this problem 6 weeks into your deal, 2 weeks from closing.
That makes sense.
Because then people have money spent, hard money up.
Yeah.
It's a
They
problem.
pay for phase 1, phase 2, all that stuff. Yeah.
And so that's the first thing we start really looking at with containers, like what's the appraiser going to do? Can we whisper to the appraiser, how's this You don't want to just go blind in because you can get stuck.
Yeah, that makes sense. Okay.
And we've had this issue come up. We've had appraisers on the phone with the client, and we're like sort of horse trading or looking at real estate bills, and it's literally, if you can get the appraiser to what they describe in the report is really important, because that goes in the file, and the regulators look at that. And
that's good. Those are some pretty good tips. Yeah, so if they have permits for containers, you guys can consider it as fixed property. If the containers are fixed to the ground in some form or fashion, it could be considered real property. Or if an owner actually calls out the tax assessor and, have them.
Sometimes zoning.
Zoning, okay.
Like, I don't know for sure, but like conditional use permits might discuss the amount of square footage, and so there's no hard and fast. It's kind of a mushy area, but if you're blind to it, it could creep up and cause a lot of problems 6 weeks into a transaction, and you just don't want that.
I gotcha.
Nobody wants that. Everybody spent time and money.
Yeah, you're right.
Certainly as intermediaries, we don't, and the lender doesn't want it because they've spent time on it, and they've got loan officers, expensive salaries.
Yep. Yeah.
Borrower doesn't want it. They got money involved.
Yeah, I got you. Okay. Well, so staying on that kind of the same lines of that on the containers, can you talk about a couple of very difficult deals that you and only you were able to finance, and they probably wouldn't have been able to get financing anywhere else? Yeah,
I wish it were so easy I could say it was me and only me, but again, our tact is really, I try to find a way to yes, even if it's not what the borrower wanted. It might be something that they could consider or make work. So my job is to present options and sort of listen to what the client feels about those, and then go one direction or another based on what's working for them, right? So
I got you. Okay.
There was a transaction. I don't know. I don't think you were involved. There was in Los Angeles for a very good storage client. It had one building, but like 10 of the other buildings were all containers.
Right.
They were on concrete little pylons with little cables where
I know which deal you're talking about.
We turned it into real property, and we had a discussion with the appraiser, and we were all good. And in this case too, the lender really wanted to make the loan, and as long as the appraisal said what it needed to go in the file, they put it in the file, and we're off to, they're not picking away at it, because borrowers forget lenders really want to make loans. It's not the opposite. Right. It was in a flood zone, so that was kind of a problem. And it was a legal non-conforming, so that the flood zone caused an issue where half the site, if the site was fine as it is, but in a legal non-conforming use, but if it was destroyed for any reason, over 50%, the city basically said that because of the flood zone, you could only build now on half the land, which lenders start to freak out about that, because if you do have some sort of weird thing like a fire, and suddenly you replace it with only half the square footage, well, guess what? Unless your rent's doubled or tripled, suddenly your property's not worth as much. And I forget exactly how we got around that. We got the appraiser on the phone. We were talking to the city, the zoning. I think we got around that because the appraisal had a condition. It was sort of conditioned upon, I forgot exactly what it said. And the lender just didn't work too hard at bringing that up or highlighting the conflict. And in this case, it was a life company that was a little bit less regulated than, say, an FDIC bank. And a very experienced lender. And the file, the appraisal said what they needed to, and the deal got done. Nice. Got it. Cool. So sometimes it's not, it's not that I have any secret formula other than just, you get a little luck and you really like weave it just the right way.
Really
and
massage it and really sell
boom.
the story. It's kind of like hearing you talking about that. It's kind of like me when sometimes I come across these very difficult to sell deals, deals that maybe it's out in the middle of Blythe. And in addition to that, it's only 50% occupied. There's a bunch of deferred maintenance, managers stealing money, it just has all type of problems.
We've seen the stealing money. That same deal I was telling you about, there was stolen. We were like, how come the statements only say this, but the rent roll, we're like, this is 1/3 off.
Yeah, exactly. Yep.
And we, the manager, I don't know if actually, but there was a difference and we had to overcome that.
Yeah. No, here you talk about that. It reminds me of me when I'm selling some of these dog properties. I have to really dress it up and sell a story to the investors of, hey, yeah, it's this and this, but this is what it could be. Or yeah, I know it's like this, but it's because of the terrible management. It's because of neglect. It's because of the absentee ownership, blah, blah, blah.
Sometimes the money is in the dogs, right?
It actually is. Like people, because the thing is, if you're buying something that's stabilized, there's really no room to go up. Rents are at market. It's 99% occupied. You can't expand. Like you really, all you can count on is just annual inflation. But
True.
When you're buying a dog, there's a whole bunch of stuff that you can do to add value. You can expand. You could kick out a manager who's been stealing money. You could raise rents. You can, you'd be surprised at how many of these older mom and pop storage facilities don't even have an internet website or a Facebook. And it's like, okay,
if they don't have a computer in the office.
Yeah, right. Like you're 60% occupied because you don't even have a website that people can go to actually find you. So yeah, hearing you talk about that, it's kind of the same concept. And I'm selling a deal to an investor. You're selling a deal to a committee that's going to approve and provide financing.
One of my one of my favorite, I always like to ask, especially when clients are purchasing, because they're better at this than I am. I just kind of take their story and craft it for the lender specifically and then go sell. But I always ask clients, tell me why are you buying this? What do you see and why do you like it? And what they tell me is usually the basis for our write-up. Like those are the strengths that I'm pushing towards the lender. And when you have an experienced buyer, that starts to be the whole deal in spite of the property's shortcomings, right? So tell me where are you going with this and why? And that's the whole story.
I got it. That makes sense. Do you guys have any limits on, minimum loan amount, maximum loan amount?
Good questions. We sort of have a soft minimum around $1 million. Less than that, we're sort of doing in a favor or accommodating. It takes, depending on how long before we actually sign up with the loan, it takes 2 months. 45 days is about as fast as you can go on anything. Right. Maybe short of a bridge emergency, like you can close in 2 or 3 weeks, but you don't love the rate. Yep. Anyway, so it's 2 months to 2 to 3 months is sort of typical. Sometimes it stretches out to 4 and 5, depending on how long they're massaging the purchase or, so it's hard to make money when you're getting $5,000 for 3 months of work and you can only do 10, 15 transactions a year at all. So but we've done lower. I did one of the lowest loan amounts I've ever done this year for my longtime client who you know as well. Okay. I don't even want to say the amount. And we do 2 loans, 25, 30 million too. So we have life companies that won't look at a deal unless it's $10 million.
Right. I got you. Okay.
So all over the place.
And what's your maximum?
We don't have one.
Okay. So if somebody came to you and said, hey, I got this portfolio deal, $120 million. I'm going to put down 30 million.
We have life insurance companies that would lend 100 million and bat of an eye and no problem.
Okay. That's nice. Yeah. So you guys can do stuff for someone that's a small mom and pop investor. You guys can do
Or their whole
buy some for
portfolio.
a REIT or some of the larger partnerships. That's pretty good.
Yep. We've our typical deal though, really, so maybe to kind of finish it out, is our we tend to like long-term clients, or I don't know if it's my goal, but I tend to end up with clients I've done a lot of their portfolio repeatedly. Like some clients I've done everything on the real estate schedule.
Yeah.
Many of those properties 2, 3, 4 times we financed over.
Yeah, because you do
years.
refinance loans also, right?
That has a bunch of, it obviously has advantages for us because we know the client really well and
Yep.
We're on their team. But for the client, we really know what they have. We know what they're looking for. Some loan opportunities come up where we can apply that to their real estate schedule, and when they're not thinking about it. Or the other thing as well is I'll spec a ton of time. We'll go to the end of the world for somebody that's a longtime client because we're not worried about them shopping with 5 other brokers too. So
Right.
although we'll do one-off transactions as well, we don't have anything against that. Where was I going with all this? You asked a question.
No, you know what, Andy, you have so much knowledge that you just got that's the thing. Sometimes when you got so much stuff in your head, you just know so much that seriously, like you've forgotten.
It's a fun business. It really is.
Yeah, you've forgotten more than what I know about lending on self-storage.
It's a really fun business.
It is.
And sort of trying to solve the puzzle is the fun part.
Yeah, that's nice, man. Well,
It's
hey,
really...
is there anything else that you'd like to share with us before we close it up? Because I know you got some more loans that you got to go and close.
Yeah. Call us for any. We're always open to talk about deals. We're not. Strategy. We do a lot of strategy before we end up with a deal for prospective clients, or even with. I work on a lot of deals for clients that never go anywhere, but they're trying to figure something out. We have no problem with that.
Yeah. How can people get in touch with you if they want to use your services?
Andy at AllisonMortgage.com.
Yep.
My phone number is 619-688-3958. That's my office phone, but it goes to my cell, reaches me anywhere. And AllisonMortgage.com is our website. You can see our company, some transactions on there.
Yeah.
The Allison Mortgage has been around since 1934 as correspondents for major life insurance companies. And the 3 principals that own the main company in Orange County have had it since the mid-90s.
Yeah.
Great company, veteran people. Oh, I know what I was going to do. Our typical client is, we're sort of a real mid-range lender. The company as a whole, as well as me in San Diego. So our typical client owns 1 or 2 or 3 up to maybe 15, 20 properties, and buys, sells, or finances maybe once a year, maybe twice a year, on a recurring basis. And we'd love to say we do $50 million loans all the time, but we don't. Our main business is between $1 and $10 million in loan amount. I've done loans up to 30 million, plenty of them. So we're not limited by larger loan amounts. But we typically help entrepreneurs who don't have a CFO. They might have an assistant, but we're sort of like their CFO for real estate. So
Gotcha.
They'll call us. We service all the loans. So even if we
Nice.
don't officially service them, if you have a problem with the loan we did 3 years ago, call me up. If the lender's doing something weird, or by the same token, the lenders will call us, say, hey, we need their financial. They haven't given it to us. So we sort of try and help all things lender to clients.
That's good. Okay, cool. And I don't know if I asked, but you guys do development loans and loans for, like, say somebody's buying it's becoming pretty big now for people to buy like old warehouses, retail buildings, convert them into storage, like buying old Kmart's and run down Sears and turn them into storage. You guys do those loans too, correct?
We do those loans.
Okay.
Less of them. We primarily do like mortgages for purchasing or repositioning.
Yeah.
We do less construction loans, but there are programs out there for that. We've done a few, and so those are available.
Okay. Cool, man. Well, hey, I appreciate your time. I appreciate you taking time out of your busy schedule to come down here and give us some of your knowledge. We finally got the legend on camera. There he is. He's real. Okay.
Cut it out.
He's real.
Hey, Brandon, this was really fun. I appreciate it.
No problem. Well, hey, guys, thank you guys for joining us, and we'll see you on the next episode.
Bye now.